Welcome back to HAC's monthly commentary. Today we're going to take a look at what happened in the markets in the month of March. We're going to take a look at what sectors performed well and which sectors didn't. We'll also take a look at some of the major changes that HAC made in its portfolio. As well, we'll take a look at what we should expect in the month of April. Last month, the S&P 500 was down 5.8%. A lot of the negative pressure in the markets was the result of the U.S. putting tariffs on a number of countries around the world. And then the counter tariffs from those countries as well. It caused a lot of uncertainty, and investors reacted by pushing the market lower. Last month, HAC made a lot of changes in its portfolio. Here are some of the major changes that it made. It entered into positions in the Canadian utility sector, as well as the Canadian grocers and staples sector, as well as the Canadian telecommunications sector. These Canadian sectors are generally defensive sectors, and what we find is the defensive sectors tend to perform well as we get close to the unfavorable 6-month period for the stock market, which starts in May. Last month, HAC entered into a position in gold. Gold has a strong seasonal period from mid-March until mid-April. Gold has performed extremely well in 2025 and is positive year to date. It's benefited from increasing geopolitical tensions. It's also benefited from a falling US dollar relative to world currencies. And as well, it's benefited from the interest rates in the US heading lower. Last month, HAC reduced its position in the utility sector, Canadian banks, the US stock market, as well as the Canadian energy sector. Last month, HAC added to its positions in the metals and mining sector, as well as the emerging market sector. The emerging market sector has done well in 2025 as a falling US dollar has helped this sector. Last month, HAC exited its position in the consumer staples sector. It also exited its position in the 0 to 5 year TIPS bonds, as well as its short sell position in the home builder sector and its short sell position in the US regional banks. What should we expect in the month of April? Well, probably more uncertainty and volatility in the markets. The U.S. is set to launch their reciprocal tariffs in early April. We should expect countries around the world to also launch their reciprocal tariffs on the U.S. reciprocal tariffs. It's going to cause a lot of confusion. There'll be a lot of uncertainty, and investors don't like uncertainty, so we could see some volatility taking place. On the other hand, we are coming into April, which is a strong seasonal month of the year. April is one of the better months of the year on average over the long term, particularly the first half of the month. In addition, it is an earnings month, and we tend to see the stock market rise in earnings months for the first half of the year. Earnings are generally set. The tone gets set by the U.S. financial banks, kick off the earnings season on an unofficial basis. And we'll have to see what happens as far as investor reaction to those earnings. Thank you for joining me today. I'd love to know your comments for what could take place in the month of April. Don't forget to subscribe, and we'll see you next month.